You can never have enough Bitcoin. I think the right way to think of this is Bitcoin is going to grow in a serpentine pattern with rapid burst of growth, some drawdown, but on an exponential curve. Right now it's like 45 or 50% compounded annual growth for the past 3.5 years since we got involved. And I think it'll just continue to grow at a high growth rate between 20 and 40 or 20 and 50% for the next 1 to 2 decades. And it'll gradually, the overall long-term growth will probably go from 45% annual to 40 to 35 to 30 to 25 to 20. And it'll hit a terminal growth rate of like 15%. And when it hits that terminal growth rate, maybe 20 years out, maybe 25 years out, it'll be growing twice as fast or compounding twice as fast as the S&P index or any other diversified high-quality portfolio of assets you could buy. So if you think about it like that, you just say, well, where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin.
Michael Saylor believes that Bitcoin is going to grow in a serpentine pattern, big spurts of growth followed by large pullbacks, and is going to do that all the way to $10 million per coin. Michael Saylor rarely gives insight into how he thinks about the Bitcoin price or specifically where he thinks it's going, but at the latest Australian CryptoCon, Saylor broke down why he thinks Bitcoin is going to double and double and double all the way to $10 million a coin. Make sure to stick around to the end of the video where Saylor breaks down why Bitcoin is the apex property of the human race. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity. Once you get that idea, then the logical thing to do is just to continue to sweep your cash flows into it from month to month to quarter to year to year. You could call that dollar cost averaging, or you could just call it, savings. But, there's no end in sight. I mean, if I told you could buy Bitcoin at 100,000 and it was going to go to 6 million and you were going to get 60x your money, then why wouldn't you?
Is that financial advice?
I am an advocate of Bitcoin. Sure. Well, when you think about investments that you're going to hold a long period of time, the two that stick out are, should I buy a diversified portfolio of companies like the S&P index, or should I buy a bunch of real estate? And if you buy real estate, like real estate in Miami Beach went from $10,000 an acre to $10 million an acre in less than 100 years. So that works out to be a 7 to 8% growth rate per year, every year for 100 years. And if you have that perfect portfolio of stocks and they're very competitive, then you might get something similar. But when you look at it, investing in stocks is very complicated. Like, name a company that'll still be here in 100 years. Like, how do you establish the S&P index? So if you take a 3-generation or a multi-generational view, it's kind of hard to figure out how I would buy a bunch of companies and hold them 100 years. But on the other hand, holding property for 100 years is very straightforward. The royal family of Japan, or the royal family in the UK, or royal families in the Middle East, they just buy up all the best property and keep it for hundreds of years, right? How long has the British royal family had the center of London? 500 years, 1,000 years, right? The emperors had the center of Tokyo, 1,000 years. So holding the middle of Manhattan or holding, if I could basically, yeah, you remember, I walked through the botanical gardens in Sydney, and I thought it's the most beautiful thing. What if you could own it? Like, what if you could own that entire garden? I don't know, what is it, 50 acres? It's spectacular. Would you ever sell it? Probably not.
You could probably afford to buy it now.
Yeah, but you know, like 500 years ago, right, someone came along and it was there. And so now property is a good investment. And the reason property goes up by a factor of 1,000 is because if you look at it, what you realize is politicians can't make more of it. You can't print more property. The garden is the garden. The Sydney Harbor is the Sydney Harbor. You're not going to wake up and find out that there's 100x as much beachfront property as there used to be. So when the money supply expands by a factor of 100 and the number of acres on the beach in Miami Beach stays the same, the price per acre goes up by 100. And that's why property is a good investment. The problem with property is you have to buy it in chunks of buildings at a time or acres at a time, and sometimes the best property isn't available for sale. The second problem is there's property tax. So if you owned all the property in the middle of Sydney, you're going to get taxed on it by the mayor and by the province and by the country. And a lot of times people can't afford to pay the property tax for 100 years. And then if someone zones your property, or if there's a war, what if you owned the nicest property in the middle of a war zone? What if you owned all of the nicest property in Ukraine, in Kiev, right? It might be devalued by the war. It could be devalued by a pandemic, by an earthquake, by a tsunami, by a tax. And you know, if I handed you $10 million and you lived in Africa, and you had a choice, buy $10 million worth of property in Zimbabwe, anything in Zimbabwe for $10 million. You could pick anything you want in the entire country and buy it for $10 million. Or would you rather buy Bitcoin, $10 million worth of it? Well, the property in Zimbabwe, maybe it's scarce, but it could be impaired and it's not mobile. And maybe you don't want to live there. And maybe the people with the money in 100 years don't want to move there. So it's not clear that you'll be able to mortgage it or rent it or sell it or carry it with you. But on the other hand, Bitcoin is capped. Bitcoin is like Manhattan in cyberspace. It's 21 million city blocks in a cyber Manhattan, and one day 8 billion people will want to live there because everybody in the world, all 8 billion people in the world want to be wealthy. They all want to keep their money. There's no one that doesn't want Social Security and economic well-being, not from now to the end of eternity. For 1,000 years, people are going to want the money. So if I created the most stable, most secure, most immutable crypto asset network of 21 million blocks, and everybody in the world understood it, they're all going to want a piece of it. There's only 21 million blocks, and a lot of it's been lost. So probably we're down to 16 or 17 million Bitcoin. And the thing about Bitcoin, which is better than property, is A, it's scarce, but B, it keeps getting more scarce. When people lose their keys, there's less Bitcoin, not more. And it's mobile, and it's portable, and it's fungible. And it passes what I call the Bernard Arnault test, which is if you want to make a good investment, you should buy something scarce and desirable that someone richer than you and more cultured than you and smarter than you will want to buy from you in a decade. And that's what I think of when I think of Bernard Arnault, someone richer than me and more cultured than me, and I wonder, would he want to buy this thing? And clearly, $10 million worth of hotel space in Zimbabwe probably may not be that appealing. And you never know with real estate whether the person you want to sell it to is going to want to buy it. And of course, people can make more real estate. They certainly can. Not all land is scarce. I mean, the beachfront property is, but farmland in Kansas isn't. There's plenty of land in the middle of Australia that isn't nearly as desirable as the Botanic Gardens in Sydney Harbor. So you got to choose your real estate very carefully, and you can't move it. And if I can't come to your country, I don't want it. But Bitcoin is scarce, it's desirable, it's a global thing, everybody understands it, and I can move it. I can have $1 billion building in Manhattan, it won't move, but I can have $1 billion Bitcoin building, and I can send it to Singapore, or I can even get a bank in Singapore to loan me money against it, or maybe want to custody it, or maybe want to borrow it at some point, or I can find, I can find a wealthy individual in any city in the world that will want to buy it from me. And you can't say the same for a piece of property in a certain place. So I see Bitcoin as digital property. It has all the great attributes of trophy real estate, but it doesn't have the liabilities and the risks of real estate because it has no physical nexus. It's immutable, immortal, indestructible, and global. And common sense says, if there's 100 billionaires and they're all bidding for your thing, the price is going up. Whereas if there's only one billionaire, that would want that thing, then they will feel like they have you over a barrel and they can give you a lowball bid because there's no other buyer. And so if you're going to own a trophy asset, you want to own something which has global appeal, and you want to be able to take it with you or move it if necessary in order to make sure the value is not impaired. That's why I think of Bitcoin as the apex property of the human race.
So there's Michael Saylor's visionary outlook on Bitcoin's journey to a staggering $10 million per coin. Through his compelling arguments at the Australian CryptoCon, Saylor has painted a picture of a future where Bitcoin isn't just a digital asset, but the pinnacle of human property. It's a narrative that challenges conventional thinking and opens up new possibilities for the future of finance and technology. Before we sign off, a quick reminder: if you haven't yet subscribed to our channel, now's the perfect time. Join the community of finance enthusiasts and don't miss out on more content like this. Your support through subscriptions and likes enables me to bring you more expert analysis and exclusive insights from leaders like Michael Saylor.